I think on a very fundamental basis, you need something with an edge. You need an entry technique, you need an exit technique, you need a sizing, you need stops. This is the day on which I entered this particular stock as a delayed reaction, and then it kept on, it went around 50-60%. If you want to become a doctor, there is a pathway. You go to the medical school, you learn first year also. You don't really start learning anything random, right? And you have to learn anatomy, physiology in a sequence. Here some guy, a doctor, and tomorrow you start trading and you expect it to work, right?
Hey, what's up, everyone? Welcome back to another episode of Trading Text presented to you by Investors Underground, the show where we break down the markets and mindset and the mechanics behind elite trading performance. I'm your host, Sam, and tonight's guest needs no introduction. He's a market wizard level mentor, a master of momentum, and one of the most insightful educators in the game. It is, of course, Pradeep Bonde, aka Stockbee. In this episode, we're going to do a deep dive into the setups that are working right now. Not just what happened, but why it mattered. We also get into the mindset and the strategy behind learning a system the right way, how to go from following rules to fully owning your process, and that constant battle with evolving. If you're trying to find your edge or sharpen an existing one, it's a must listen. This is one of the most insightful conversations I've had the privilege to be a part of. Please welcome to the show, Pradeep Bonde, aka Stockbee. Pradeep, how you doing?
Good, good.
Good, very good. Welcome back, Chris. Familiar face.
Absolutely. It's been a little while, Sam, but the last episode that I did with Pradeep was so good. When I heard that he was coming back on the show, I had to come on to co-host. So we're super excited to have Pradeep back on. He's just a wealth of knowledge, a great person, and actually, he and I got to spend some time together at Traders for a Cause, and just an incredible person. So very happy to be with you.
Yeah, very
Thanks.
excited. And Pradeep, the first question I've got to ask:
Mhm.
how does it feel to have been the mentor of a market wizard? Obviously, I'm talking about Christian here. How does that feel?
It's a great feeling that, like, people have gone ahead and done so well after, like, learning from stock beside basically.
Yeah, no, it's incredible. And what a guy.
Mhm.
Met him a couple of years in a couple of years ago at Trades for Cause, and just what a guy. Anyways, we've got so much to talk about tonight. Absolutely so
Mhm.
much. Chris, you want
Mhm.
to kick things off tonight with market breadth?
Definitely. So, Pradeep, on the topic of market breadth, this is something that you talk about frequently. And I feel like in this very headline driven environment, it's been a super volatile. And I feel like
Mhm.
this has been almost like a trending topic that a lot of other people have started to become a lot more aware of.
Mhm.
And so, could you just give us a little bit of a summary of what is market breadth? And then why is that important? Why does that actually matter, especially for a momentum trader?
Mhm. So market breadth is basically a market derived information which tells you in any move in the market how many stocks are participating. You can look at it on an intraday basis, you can look at it at the end of the day basis, but the amount of participation in a move tells you whether this is a genuine move or whether this is like a move which is lacking conviction or lacking big buying. So market breadth the best advantage of market breadth is that it's a market generated information. You're not like using an external some sort of an indicator. It just tells you today how many stocks were being bought and how many stocks were being sold.
Excellent. And I feel like a good analogy for that is like if you were to look out over like a body of water and to see a bunch of ships, if you see them all drifting one way, you know
Mm-hmm,
that there's a current kind of pulling
mm-hmm,
them one way.
mm-hmm,
And it's the same thing for a momentum trader. If you see all the stocks drifting one way, you know that there's a current of demand or of buying in the market.
mm-hmm,
And if that is going the opposite way, then as a momentum trader, you don't want to fight a current that's going the wrong way. You don't want to be fighting
mm-hmm,
a tide. Is
mm-hmm.
that kind of an accurate representation of what you're describing?
Yes, that's very accurate way of saying it. Like because uh, as you know in the market, like if the more stocks are going up, then it's much better environment for trading breakouts, because breakouts will work, and it's also a good environment for trading pullbacks because in that environment, continuously money is coming in, stocks are going right and in one direction. uh, and then there are subtleties of market breadth in terms of if there is an excessively bearish market breadth, it is extremely bullish. And when market breadth becomes too bullish also, that tends to be a period which leads to a correction. So it gives you multiples of signals basically.
Yeah. It's super interesting because I feel like this year, it feels like we always go through phases of something being a hot topic or a
Hmm.
buzz or something that's just very important. And it seems like the last few months that all of a sudden I haven't seen many people talk about market breadth on Twitter last
Hmm.
year. Then all of a
Hmm.
sudden it's been one of those key indicators that everyone is referencing on a daily basis.
Hmm. I think that happened because of the that big breadth indicator, like, and it gave a signal, and then everybody started talking about it. But like market breadth has been around for ages, right? And it means on a daily basis, you have arms index, which is a indicator of daily new high, new lows, or you have like a percentage of stocks above moving average. So how many percentage of stocks are about 200-day moving average or 50-day? So it just happened that that signal came in and a lot of people started talking about it. So it's yes, I
Yeah,
know like
a 12% up day in the Nasdaq. We'll do that every now and again, catch some attention. But so to dive into this topic a little bit more,
mhm,
could you walk us through how does this look in practicality? So let's say that you're scanning the market, you're looking for momentum bursts, you're looking for episodic pivots, you're looking for bullish setups to
mhm,
participate in, and you come to the market, you scan, and it's not looking good. The
mhm,
current's going the other way. There's not a lot of
mhm.
stocks up. It's more bearish. So are you just sitting on the sidelines, or are you using your time to scan for other setups, or how do you actually go about it when you're getting risk off signals?
So essentially, because I trade multiple setups, so if I see like the question which I ask myself every day is, are breakouts likely to work for next 3 to 5 days? Because that's really the time period for most of my trades I am holding for, right? So if I can answer it convincingly based on market breadth, whether there is buying coming in, then I am very aggressively buying breakouts, right? The answer, if it is no, then obviously our breakout. Sometimes the breakouts don't work on the bullish side, but doesn't mean that the breakdowns are working, right? So you just can't go short because it's not working. So then the next question you ask is, are breakdowns working? Now that is the second thing. If that is also not, and you're not sure, like say like today morning I came in and I asked myself that question and I said like, and I'm not sure whether breakouts are likely to work, right? So then you reduce your exposure, or you trade more intraday, or you trade a different kind of a setup. But that's the first question which I look for every day. And during the day also, I have a breadth indicator which is part of like trade ideas. In trade ideas, there's a breadth indicator which minute by minute it tells you how many new highs and new lows are happening in real time. So that also tells you when buying comes in into the market suddenly. Today, like suddenly buying came in later, and then in the last 55 minutes again, sudden selling came in, right? So you can figure that out. But if you're a day trader, that is useful. But for a swing trader, sometimes when you see things are starting to fade intraday, then you just go and uh, increase your stops, or you go and like take profits on things because you know it is going to fade.
Yeah. And so this is, you described that this is a part of your process,
Hmm.
scanning the market, looking at the breadth of the market, and
Hmm.
realizing when it's time to push versus when it's time to be defensive.
Hmm.
When did you start incorporating that into your process? And this reminds me, we've had conversations before where you always recommend people to go very, very deep into a process.
Hmm.
So did you come across this early in your process, or was this something that as saw these setups are not working from time to time? I need to
Hmm.
incorporate this into my process. And was that later on?
So essentially, I started using breadth in the first 4 years of my trading, basically. But like the first 2 or 3 years was like what was happening is because if you're a breakout buyer, which is typically what happens, breakouts work, 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 work. You're very aggressive, and then you become super aggressive because breakouts are working very well, and that's when the market takes a dip, and then you wipe out your profit. So I was riding the Disney land roller coaster, right, and making 40%, giving up 20%. By the time I realized something had changed in the market, uh, it's too late basically. So I was like in it 3 4 times. I took my account up like 60 70%, and I was like ended up giving up half of it or more than that. So I said there has to be some solution to this problem, right? And basically because uh, there has to be some filter which tells me when to be aggressive and when to be not aggressive. So when I realized that, then I started looking at what are people using. And when I was looking at what are people using, like I went through a lot of like different ways of doing this. But the recurring thing which even institutional players use is market breadth. So once I figured that out, it was just a question of creating a version of market breadth which works for me based on some of the ideas which I picked up from things like McClellan indicator and Fosback. There is an author called Fosback who wrote a lot about this thing. Then Martin Zweig, and there are a number of like models which are breadth based. So I just managed to study them and then start creating some sort of a model, which over a period of time I refined into my model basically.
I'm just interested, like how sensitive is the modeling for that as well? Like, obviously, like we pretty much topped after the election.
Hmm.
Is there like a strong signal that there's a potential reversal? Is that something that you can find out from market prep, or is it more on a case of as we're pulling back, you can tell whether actually there's going to be bullish signs?
One of the things about market breadth based timing models is all market breadth based timing models which I have studied and I know of, they're very good at giving you a signal at the bottom. They're very poor at telling you exactly this is the top. What happens at the top is that there is a gradual um, deterioration, right? And so you see that in terms of breakouts starting to fail or breakouts not making as much as you expected them to make. So there is, you have to look at the subtlety of those signals more than like just the black and white. But at the market bottom, there is almost like a black and white signal which tells you the market is too oversold and this is the time to get in, kind of a thing.
That's a great point. And we had Connor and Ted, some young great traders on the
Mhm,
show a couple of weeks ago, and they were talking about stage analysis, and they were
mhm,
really talking about that concept of during market tops, it's really when good news, when good fundamentals, everything fails to push things higher, and that's
mhm,
that distribution as the people who have been in the stocks are using that as an opportunity to basically sell it, and so you tend to have those more rounded tops. And
mhm,
if you compare that with market bottoms tend to be a lot less stable because there's shorts in there, there's
mhm,
a heavy options activity, and it's
mhm,
usually a temporary very quick thing. So that's logical that the
mhm,
market breadth indicators are much better at finding bottoms than they are finding tops.
mhm. Yeah, and see, it's like what they said is right. Basically, that's how you can figure out, because you see a company coming out with a good earnings and then like it sells off rather than it keeps on going up, or breakouts happen and everybody's excited because it's a breakout coming from a long consolidation, and then that breakout fails because that particular breakout is being used to liquidate positions which traders have built before, kind of a thing, right? But in the bottom, what happens in the bottoms is like there is almost invariably uh, there is a pain point which the politicians cannot take. There is a pain point which the Fed cannot take. There is a pain point where the system cannot take, because if they allow the market to go down more, it's going to create some sort of a lot more damage, kind of a thing. So when that kind of a breadth reaches, there is a sudden change in strategies by everybody, or there is like the Fed comes in and they pump in the market, or the government changes policy, or things like that happen. And they happen very quickly, because when a panic sets in, you make like a decision much quicker than when things are like you're boiling a frog. It takes a long time. So that's the dynamics of the market.
That's very well explained, and I love that question you ask yourself as well, because it's funny because like of all like I get the opportunity obviously to interview a lot of guests, and so many start the day or are in a trade and they ask themselves a question that's quite simple to answer. We had
Hmm.
Jeff Holden on from SMB, and his question he always asks himself when he's in a trade is, are market participants behaving in the way I expect them
Hmm.
to?
Hmm.
We had Scott Manzo on who asked, should I play offense or defense today? And I love Am I expecting breakouts to
Mhm.
work today?
Yeah, I have spoken to a lot of traders, like you people speak to a lot of traders, right? And every single experienced trader at some stage in his trading career realizes the importance of some sort of a situational awareness, which is like what market breadth is one of the tools, right? And that's when the trading improves, because it's just things which work very well for 3 days can stop working. So you have to be constantly asking that question, look, what is the market environment in which I'm trading, and how aggressively or how defensively I need to be.
Yeah.
And I feel like part of that expertise, that's, when you go deep into something, when you really understand the nuances, I feel like a lot of traders don't even know what are those environmental factors, what are those external factors that they need to bring into their very niche strategy. So, you have a somewhat of a niche strategy that you've developed over time, and not only do you have, multiple strategies that work, but if you were to zoom out, what environment do they work in? How do you have to be, feeling and trading for them to work the
Hmm.
best and everything. So it's you are zooming out and you're understanding all the nuances.
Hmm.
When people are, developing their own trading system, when they're looking for something, I have two questions. The first one is, do you think that people should model successful strategies, or should they try to come up with something that, on their own? That's the first question. And then the second is, how how frequently does a strategy need to get refined and change? Is it like, is it once a month? Is it like once a year, depending on what's going on? So
Hmm. I think let's take the first part of the question, which is whether traders should create their original things, or they should mimic somebody or copy somebody's style, right? Human behavior is like we learn by copying others, right? And which is a very simple social way of learning, right? And basically, so it's much easier to copy something which has worked and make it work, and over a period of time then you can create your own style and add your own nuances to it, and you can make it your own style, right? But for a starting trader who is starting out, I would say that it's much easier if you copy somebody, because there are methods which have worked for many people, and they are in public domain, like small cap shorting is something which is profitable, and there is an inherent edge in doing that, right? Or like in a growth investing or value investing, or some of the things like mean reversion, if you're trying to do a quantitative kind of a trading, you can spend 2 years 3 years bumbling through methods which don't work. Rather than that, you can spend 6 months and take something which has worked for somebody and make it work, right? And basically that's the easier way to do. The problem for a new trader is, this is easy for me to say it now, but the problem for a new trader is he doesn't know what works, right? So they have no clue, they are clueless, so they are going to pumble through things. It's only that uh, the traders who manage to do it, either they don't blow up during that thing, or they have the capacity to bring back some capital again when they find a successful method, right? And that's the thing. The second thing about whether you should develop your original thing, originality comes in from once you start trading, and once you see a lot of original ideas are just a twist on some other idea or nuance people are using, which is people didn't realize, or you realize that if say if you're into fishing, and if you are fishing in the same pond as 100 people are fishing, you're going to find less fish, right? If you're fishing in a pond in which you discover a pond which is relatively unknown, and you don't tell anybody, you don't even tell your mother-in-law, father-in-law, or anybody, and you're the only person fishing, obviously you're going to catch the best fish, right? So that is the quest which becomes, once you are successful to find something which is a variation. This might be just a pond which is smaller pond, but because it's not overfished, you have a better opportunity basically, right?
Yeah, I can safely say that I would not tell my mother-in-law or father-in-law. I hope and I hope they don't watch this back. um, I'm just interested in talking about that new trader finding their mentor. I think one of the hard things, and I'm interested to know
Mhm.
actually, how important is it to find a mentor that fits their potential personality, or do you think that like trade personality is kind of nonsense and they should just, well, where there's edge, you should trade?
I think it's not a nonsense because there are distinct personality types, right? And I mean, you have people who cannot trade pullbacks, and there are people who can never trade a breakout, right? It's just like in their psychology. It's like in real life. I have a friend, right? And once he said, like, let's go grocery shopping, right? I go to grocery shopping. I just pick up things from the shop, right? And if I need olive oil, I'm just going to pick it up and go with it, right? We went to four different shops because he says olive oil is $5.99 here, it is $3.49 here, and all. So that's his personality, right? So same way, there are people who can never buy a stock at 52-week high. They need a bargain. So that, and also the personality type which is required to do something where you're going to hold for longer term, or you're going to like in a find only stocks which are going to double and triple. The skill set which is required also is very different, right? You need more analytical skill if you're trying to do that, or you need to be a lot more understanding of the industry or the sector or the catalyst. As against that, if you're doing short term trading, it's a very different personality type, right? So yes, they need to have find something which matches their personality, right? The big problem for beginner trader is not that like there is not information or something, but there is no pathway in trading, right? That is the biggest thing. If you want to become a doctor, there is a pathway. You go to the medical school, you learn for first year also. You don't really start learning anything random, right? And you have to learn anatomy, physiology in a sequence. And then second year, you learn clinical science and things like that, right? But
Mhm.
here, you can be like just some guy, a doctor, and tomorrow you start trading and you expect it to work, right?
Yeah.
Yeah, that's a great point. The barriers to entry. So, back to the like, the process. So, if using a cake analogy, if you were, if you were building or baking a trading process, what ingredients do you need? You need, someone to recognize what kind of personality they have. Like you mentioned, do they prefer going long, prefer going short, large caps, small caps, trending, mean reversion, choppy things, big moves, scalps, all these factors. So what do they prefer? And then a second, what has edge and that's proven and that they can model after someone? What else? What other ingredients do they need to really develop a system?
I think on a very fundamental basis, you need something with an edge. You need an entry technique. You need an exit technique. You need a sizing. You need stops,
Mhm.
right? And five things like basically, what are you going to trade? Means that is the edge kind of a question. Look, are you going to trade small caps, or are you going to shorting a small caps, or are you going to be going a news based kind of a play, stocks in play kind of a thing? If you are going to do that, what is the entry? What is the exit? What is the stop, or what is the sizing which you can do, right? Those are typically the question. Now the problem really for a new trader is he doesn't even understand his own personality. He has no clue of all the possibilities. Like they don't even know, many times people don't know that look, you can make a lot of money shorting. I get like people coming in and they say like, I don't want to do a trade. I said like, s- most of the traders whom I know who are making $1 million a year, they are day traders, right? So the biggest problem for a new trader is ignorance. Their understanding of the process is so limited that if you don't know what are the possibilities, actually how do traders make big money, if you don't know, then you're just like making decisions based on information which is suspect, right?
Yeah. Yeah, that's well said. And I think on that, that was one of the certainly one of the game changers for me was firstly when I found Nate from IU.
Hmm.
Um, and it just stressed the importance of entry and exit signals because
Hmm.
it can be quite easy sometimes to throw darts and
Hmm.
a trade will work. But a lot of the time, actually, you'll end up being frustrated, stop out, the trade will then work, etc.
Hmm.
Like that
Hmm.
importance of timing. So
Hmm.
yeah, I mean, I'm so glad you said that. I mean,
Hmm.
for me, I would really stress that, and I think what like the points you made, I think it's a beautiful cake, as Chris put it.
Yeah.
Yeah, and then Pradeep. So another question about kind of like going deep on something. Do you think a lot of traders, once they really dive into a strategy, do you think that a lot of them realize, the limitations of it, or the benefits of it, and then kind of change trajectory? Like, did the style that you have now, is that what you pretty much started with, or do you have a much different variation of what you were originally doing?
Yes, the style has evolved. Like, I have a lot more setup ideas for different environment. I was just doing one kind of a trading or two types of trading, EP and momentum burst, basically episodic pivots and momentum burst. Right now, over the years, out of experience and understanding what works, what doesn't work, looking at things, I have now variations of momentum burst strategies. Like high price stocks behave differently, right? Low price stocks behave differently, or like basically stocks which have institutional ownership, high institutional ownership, they have a different characteristic when they break out. So those variations I discovered when I started deeper going deeper into that particular kind of a thing. And in order to go deeper into anything, first you have to marry something, right? And a strategy, because if you marry then in a strategy, then you can start understanding the nuances, and over 6,000, 7,000, 10,000 trades, you can see a pattern, right? If you're just shifting strategies or styles, then it becomes difficult to do that, right? And basically, so I think that's the first decision when has to come to conclusion as to what kind of a trader I want to be predominantly. Do I want to be a scalper, day trader, swing trader, or position trader? Because once you make that decision, there is a lot of pathways which open, right?
Yeah.
Yeah,
But it's
and
not.
then
Let's be clear. It is not easy for a new person, because it's like you are in Las Vegas, right? We are in Vegas, and if you are walking on the strip, there are people who are saying, Shh, "I got this, I got that," right? And it's all like different people selling you different things, right?
Yeah. I'm just smiling away because I mean, I couldn't agree more. And I think like what's so great about your advice is it just applies to like it's trading like as a whole is like find a solid base that you can
Mhm,
trade.
mhm,
And then I think like before you know it, like the nuances, you just start to work out the details. And then
mhm,
you realize the devil becomes the devil's in the detail. And then all of a
mhm,
sudden, actually your systems evolve without really moving too far away from where you started. And I think, like to your point, I think the issue is like 1 minute someone would like describe themselves as I don't know, they're trading small caps. Next minute they're doing this, and then they're doing
mhm,
that, and then they're trading
mhm,
that. And then before they know it, they haven't really got that base or that
mhm,
foundation, and then they don't get to know actually what it's like to experience cycles and those some of those details. So I'm
mhm,
just smiling away in
mhm.
agreement, and
Yeah.
yeah, well said.
Mhm,
Yeah, and then Pradeep, something that you and I talked about, kind of, off the cuff in Las
mhm,
Vegas was,
mhm,
really the why behind trading setups, and
mhm,
some of the things that you just mentioned with like large caps behaving differently than small caps, having different players in there.
mhm,
You and I really talked about how these different, setups, they all have a why behind them. There's a
mhm,
reason why a setup happens,
mhm,
and if you go deep enough into a setup, you can usually discover the why and know that it's not just random. So while a new trader might think that just because this technical, indicator shows this, that's good for a while, but to really understand a setup, I think understanding who are the players, what is
mhm.
actually moving the stock, that is huge. So, could you just talk about the importance of understanding the why behind the setup?
Yeah, but see, like when I started trading, I had no clue why these things were happening. Why are these low price stocks suddenly go up 300, 400, or 800% in one day? Or like, why certain stocks tend to be best traded near their lows, kind of a thing. But then now, there are different levels of players in this industry, right? And basically, the small cap players are basically also two types of small cap players, right? And there is one small cap player who's really understands small cap, and they understand that the real age in trading small caps is in shorting. They are like in a not really means you can make money from small cap on the long side, but there's more money on the short side than on long side, because in reality most of the small caps, especially the nano caps and small caps, they're just like they're fugazi, right? They don't have a business. Some of them, they are just like in a, yesterday they were like in a some some other company, and then crypto becomes a big thing, they become crypto company. Or they were like basically doing some other mining, and they become suddenly like Trump says nuclear energy, they'll become nuclear miners. So uh, as a result of their business model is so unstable, or they don't have even sustainable cash flows and sustainable business, uh, their moves tends to be very short lived unless there is a real catalyst. And that's where the understanding of that is. But there is a whole bunch of people who trade small caps with this island mentality, because they think that small cap is keep on going up and up and up, and they are spending so much time. And that's why the whole industry of pump and dump exists, because there are people who believe in that small caps also, right? Now that's the one area of the market. There is another area of the market, and which is like really the growth stocks, which are like discovered by the markets, and then they go on to make like hims and hers, or like transmedics, or say any one of the stocks which has real growth. They create some category, and then they go on to make a big move, right? They are going to or Palantir for that matter, or Tesla when it was growing. That's a different category of stocks. But then you have a stocks like I have a strategy which I created in last 5 years, where I look for stocks where minimum 2,500 mutual fund own them, right? Now only 150 stocks are owned by 2,500 plus funds. That means uh, now these are like really must have for mutual funds, right? So now if I am scanning in the morning and I see a stock starting to break out first 10 minutes, 15 minutes, I know this is not retail traders, right? This is not some like a small time trader. This is an institutional breakout, right? Or this is institutional money is getting into this particular stock. So that gives you a conviction to do a size or do things with that particular stock. And it also gives you an opportunity in 150 stocks. um, Typically institutional quality stocks, they tend to have this pullback works best on institutional quality stocks. Reversal work very good when they are near low, because institutions support because they have a real business. This companies, all of these companies are real business. They have real revenue, real the management kind of a thing, right? So that behaves differently. And then you have these stocks which are like just completely stories, and the market for whatever reason captures market's imagination, and they keep on going, right? So I didn't understand. I used to think, look, and a stories should not stock should not go up because of stories. But I today my biggest realization after trading for 25 years is the best stock to trade are story stocks, right?
Yeah, and a lot of times they have higher volatility and everything. And
Mhm.
I want to bring this back to, you on the long side, your momentum bursts, your episodic pivots, breakouts. If we go back to like first principle thinking, what you're really doing from my perspective is you're recognizing when a wave of demand is coming into a
Mhm.
stock and
Mhm.
you're participating in that. So it's really regardless of what the stock is, what the play is, if you can identify where that source of demand is, if you understand the structure of it, then you can participate to some level in that. Would you agree with that?
Mm, mm. Yeah, you're just reading that suddenly there is a buying interest or selling interest in this particular stock, right? And for whatever reason, that's what momentum burst is. Sudden buying creates this burst of momentum, right? And which lasts for 3 to 5 days, or sudden selling will create that kind of a thing. And you're just trying to find where the money is shifting in the market continuously, right? Basically, which is profitable if you can do it well.
Absolutely. And speaking of those setups, I think now might be a good time. We got your screen ready. Would you
Mhm.
be able to show us perhaps a couple of examples of some that worked recently, either did or didn't, but some that set up recently that are particularly good to show the audience?
Okay, so let's look at like in a hymns and hers, which is like in a basically. So this is hymns and hers, right? And basically hymns. So you'll see that like in there was a catalyst here tie up with NVO
Mhm.
for the Ozempic, and then like the stock went up that day, but like it faded. But this is where I bought it on this particular day. This stock as a delayed reaction. This is another thing which I have discovered that stocks have delayed reaction to earnings catalyst, especially bigger stocks tends to have delayed reaction to earning catalyst, and that gives you a good entry into this kind of a stock. Now similarly, I'm monitoring a stock like say Robinhood now, right? And here there's a earnings doesn't really didn't do anything. Now today, like actually it started having a reaction, and then uh, it will have a continuation kind of a move, right? On the other end is like if you have like say stocks like Rocket Lab, right? And here look at basically, right? So here you see Rocket Lab, right? And it has good sales growth and things like that, right? And then it breaks out with volumes which are very high. Like one of the things which I discovered through my studies is that uh, there is a threshold of volume. If that threshold of volume comes in, stocks tends to make big moves. So whenever I'm always looking at what is the threshold of volume, and I found that the threshold for most common stocks, and this has changed since COVID also, is 9 million plus. If 10 million plus shares trade or 9 million plus shares trade, then they tend to have explosive moves in the short run, basically. So these are like some of the things which are there. Even in the case of hymns, one of the reason why I put it in my thing was like on this particular day, the volume was 152 million shares traded, right? Which was the highest volume you will see in its entire lifetime, right? So these are some of the things which basically makes these big moves or big moves. Really, the explosive move starts with explosive volume, basically.
And just touching on him as an example, um, so did you say you bought it 2 days after that initial move? So you wait for
Hmm.
that pullback, and
Hmm.
then is your entry signal then like a break of that a second day, or I know you touched on in the last chat with Chris and Judah that how actually a lot of what you do now is just experience, and those
Hmm.
behaviors are so well learned.
Hmm. Hmm.
You're just it's just like second nature just to go. I know this is going to work.
Yeah, no, the entry signal for me was like the way the moment the stock went positive for that day. It was negative on that day. It opened negative, and the moment it went positive, or like in a what red to green kind of a day, which a lot of traders say like it started red and it turned green. So that's when I got into hymns. So that is what I tend to see do a lot nowadays on delayed reaction episodic pivot, because especially on these more established stocks, what you see on episodic pivot is the day of the entry or the day of the breakout. If you try and enter, uh, you're going to get shaken out
Yeah.
because there is overreaction many times. So I just wait for a delayed reaction. So again, another example of this, which I did some time back, was Reddit, right? And I read it here, this earnings. Now it like almost came and revisited that low, or it would have got stopped out. This is the day on which I entered this particular stock as a delayed reaction, and then it kept on, it went around 50-60%. So delayed reaction is a setup, um, this thing which I've done, setup variation which I've done, where I look for, instead of entering it on the day of the event or news, I look for a delayed reaction entry because it gives me a better stop and a larger size trade than if I try to enter it on the day of the news. You also get shaken out a lot on the day of the news. Invariably nowadays, you'll see that uh, on the day of the news, this is a very common pattern which is happening nowadays, right? You get some sort of a thing, the stock fades for the day, and then second day is when it breaks out and makes a move. So this is another variation which I'm observing in even in the case of Netflix. Like when I entered this, right, and basically I entered this was the day of the earnings. I entered this trade here basically as a delayed reaction. So that's the variation of EP, which increasingly I like than just going straight into an EP.
That's interesting. And you talk a lot about delayed reactions, and I feel like
Mhm.
it's almost counterintuitive for people, but it makes sense. So if a stock is trading at a baseline and then they have a piece of positive news, it's like, okay, where's that demand coming from? What is moving the stock up? It's the new people entering, from the news, and then it might be short interest coming off. So maybe
Mhm,
shorts recovering. Maybe you
mhm,
have some retail people are chasing. So you have kind of a confluence of factors that can spike it up a little bit more than its normal
mhm,
baseline
mhm,
off that news. Whereas an institutional trader might be waiting for it to pull back to a moving average or something
mhm,
before they absorb it. And
mhm,
so it's almost like if you pour a soda too quickly, you have all that froth that goes with it, and it's kind of
mhm,
waiting for it to settle down
mhm.
before it picks a real trend. Is that kind of an accurate description of what you're observing?
Yes, what has happened? The market has changed since COVID 19. What has happened is reactions to earnings tend to be much bigger than they used to be earlier. Same news might lead a stock to go up 8%. Now it will gap up 20-30%. So as a result, the people who bought it in anticipation of the news, it's much easier for them to just take the profit. There's also like some sort of insider selling or whatever might happen, and then but this is like, again, this there is a nuance to this. This tends to work best on established stocks, the stocks which have larger capitalization. Now if you have a very small capitalization stock, or if you like get a good news on something like 50 million capitalization stock, you just have to go on the day of the news itself, because there is no going to be any delayed reaction is going to be after the move has happened almost. So I do this more on institutional quality stocks which are owned by 1,000 plus funds, or stocks which are owned by like Netflix is owned by 2,500 plus funds, right? So mhm,
Yeah, and then on the topic of basically nuance again. So, you have all these setups that you've developed, you have all these different market caps and everything. Problem solving. The market changes since COVID, options get introduced,
mhm,
volatility profiles change.
mhm, mhm,
You had a great saying that you mentioned. You said that I think it was a German philosopher who
mhm,
said that any problem can be solved by going for a walk and
mhm,
basically just coming up with a couple of solutions, going and
mhm,
trying them. If those don't work, you go for another walk.
mhm.
So, when do you know that there's an actual problem in the process that needs to be solved versus just kind of a one off? Like, do you wait for it to happen 10 times, 30 times?
I think intellectually and in practicality divide the trading problem things development into two phases. One is like day to day I'm trading, but at the same time every day I have like around 1 hour of time which is dedicated to developing something new, right? And basically, even if there is no problem in my trading, because uh, that's like in a philosophy which is like a lot of companies also have, like 3M, 25% of the products should be new products which didn't exist 3 years ago. That's their philosophy, right? So as a result, if you're purposefully doing new trading development or looking for new ideas, then your chances of like getting caught by surprise are lower, right? The second is, on a daily basis I have a study which I do every day. What I do is I look at stocks which have made 20% move in the last 5 days, because that's the kind of stock which I am interested in, like which is momentum burst, like where a stock makes 20% in 3 or 4 5 days, right? So I study those. I study every day 50% plus moves in the last 2 months. So any stock which has gone up 50% plus in the last 2 months, I try and study them to see what are the characteristics. This is something which I picked up from my previous job, where like I had 1,600 salespeople reporting to me. So what we used to do is every day you study the top 10, or every week you study the top 10 or top 20 salespeople, because they are selling in spite of whatever might be the circumstances. They're doing very well, right? So you learn from them and then replicate, right? And basically, so the combination of these two, which is like I'm trying to find a short term explosive move, or I'm trying to find a big episodic pivot move which will be 50, 100, 200%. I'm constantly studying, so you see patterns, right? Like, and I've been doing this 50% study for last 24 years. I see number of stocks making 50% moves has dramatically increased since COVID. I see the kind of stocks which used to make 50% move and the kind of catalyst which makes 50% move is completely different from what used to happen pre-COVID. Nowadays, almost the entire list of stocks which will be 50% plus will be small caps with some catalyst which is like a really not really real catalyst. It will be just some um, fugazi kind of a catalyst. Now that change has happened, so you have to adapt your methodology to that particular kind of trading. Focus more on story EPs rather than a real EP. Focus more on like a smaller stocks with the news kind of a thing.
That's so interesting because you're effectively you're evolving before you need to.
Hmm.
You're problem solving before problems
Hmm.
arise. That's amazing.
Yeah. And
Yeah.
also, see, like, I talk to traders all the time. I'm on Twitter. I look at like other people's. If I see something which which can be used, right? I take it into the laboratory. I have a Stockbee lab kind of a thing, and then try and perfect it, because it takes 6 7 months for a setup to be perfect before you can actually start putting real money in it, right? So if you don't do that, then what happens is something which was working suddenly stops working.
And is that typically just like a visual process for you? Like it sounds like you're scanning a lot of charts. Are you saving, annotating,
Mhm.
doing deep dives into the news, etc.? Like, what does that process look like in the nitty gritty?
It's more like every day I have time set aside for doing 20% study and 50% study. So, and I have notebooks. I'm not like one of those person who is very technologically savvy in terms of keeping notes that way. So I write down, I print out the charts if I see something like which catches my eyes, and then try and analyze that and see, try and figure out like, and this is how I developed a new setup idea or shorting, which is called weak structure short, which I use a lot nowadays. Which is like, I was watching these stocks which have gone down a lot, and I found that there is a particular pattern which they exhibit in their first 3 days of down move. So then I figured out how to scan for that pattern, and then created a setup idea around it, right? So weak structure chart, like, and if I can find an example of it just now, like we are talking, let's see, like, and I can show you an example, right? And basically, if you can see the screens share,
Yep,
right?
definitely.
And basically, so this is what I am looking for, right? And basically, what you see is like whenever a stock is weak, it will sell off for 3 to 5 days, and it will like just have one day bounce, and that is the day after that, like you short, and it just keeps going down. So let me see. This was like in July 2024. So if you see July 2024,
Yeah, that even something like mRNA, that seems like
yes,
a great
mRNA.
example of that concept.
Yes. So these are basically stocks which are so weak that when they try to bounce, they cannot even bounce for more than 1 day or 2 days, and their bounce is so weak. So now like studied thousands of examples of this same pattern, and I know why this happens, because the understanding the why is also important, because most of the time this pattern happens because the fund decides to liquidate their position, and once they decide to liquidate their position, they just don't care because they have so much stock to liquidate. For whatever reason, they decide to get out of that stock. They'll come sell for 3 4 days. Some retail investor or some min reversion trader goes and tries his luck, but they have more stock to trade, and it just keeps on going down. Right?
And it's just the total flip side of, instead of momentum burst, demand coming in and everything, it's the
Mhm,
flip side of that where you have supply coming from
mhm,
somewhere. There's a reason to the setup,
mhm,
there's a why behind it. And
mhm,
that could be a fund liquidating, could be
mhm,
fundamentals deteriorating.
mhm,
And so
mhm,
as people are perpetually selling into that, eventually it might get a little bit short crowded, or you might have
mhm.
someone try to buy it, swipes it up, basically, squeezes out a little bit, and then it continues its long-term
Mhm.
trend.
Yeah, you're right. Exactly. That's the process. Because if some fund decides to liquidate, they don't care, right? They're just going to keep on liquidating. And there are a lot of stocks to liquidate.
Yeah, it's just so helpful to, to really piece it all together
Hmm.
with, finding the path of least resistance, understanding the why
Hmm.
behind it, knowing where that supply and demand is coming from,
Hmm.
understanding the nuance. And you really only get that from just going so, so deep. And, I was just surprised, from when you were talking about how much time you set aside per day to just study, to be proactive. And you could definitely tell that that's a big difference from how a lot of other traders approach it, where they're all being reactive, or they're fixing problems as they pop up, versus studying and being innovative before that happens.
Yeah, I think a lot of successful traders spend time developing new things because they realize If you've been in this industry for 10 years, 15 years, you realize that a lot of setup keep deteriorating, or they don't necessarily deteriorate, but they change their form, right? And they are like, the same setup needs to be traded differently because of changes in the technology, market participants, or ETFs didn't exist, right? And options, which is a good example. Today, there are many stocks on which there is more option volume than the real volume, right? Now that has completely changed the kind of setups on those stocks. So technology is evolving, market participation is evolving, the amount of uh, capital which is coming into the market keeps on evolving. As a result of that, like small cap shorting today is a overcrowded trade, right? People didn't know this, like 5 years ago, 10 years ago, it was not a very popular setup, or it was not commonly known that you can make money shorting like small caps. Now today, uh, all retail traders are aware of this, or at least not all retail traders, but the retail traders who know what they are doing are aware of it, right?
Yeah, good example.
Yeah, we had a conversation a while ago with a couple of traders, including Ariel and some other people about the
Mhm,
topic of edge erosion, and that was something that came up where it's if you go back to first principles thinking, you can always find another way that that setup kind of plays out, but it
mhm,
changes. It changes with the market, it changes with the
mhm,
participants and everything. So is
mhm.
that kind of how you approach edge erosion as well, where it's by being innovative, by understanding the structure, you're just able to find a different variation of a strategy that's working when one stops working.
Yes, like let's take episodic pivot. Episodic pivot is very rare. It doesn't happen it happens only 3, 4 times in a year. So I was like, I defined the problem, saying, look, the problem is this is a setup which gives you 40, 50% on your capital if it works, but it doesn't happen with the frequency. So what is it that makes a stock go up 50, 100%? And then backward engineered the whole thing, and that's where I came up with this setup variation, which is ep 9 million, where I am taking volume as a catalyst and looking for stocks which are, so that expands your probability of eps to around 200, 300 in a year. Age erosion is going to happen because there is this saying in the Indians, I was saying, not the kind of Indian I am, the native Indians, that you never cross the same river again, right? Because the river is constantly changing. By the time next time it's changed, right? And so same thing, the market are constantly changing because of technology, because of market participant, because people learn strategies, people figure out what others are doing, so it's always changing. So the minor variation you have to do, or minor adjustment, but you have to keep on adjusting. That's why I don't like it. Find it so amusing that people say, oh, you have to be very, very disciplined. You can be very disciplined. If you're disciplined, you're not going to be creative, right? These are like in a paradox. If you're extremely disciplined, you're just going to be trading a setup with discipline. You will never experiment.
Yeah, it's no, and it's so powerful, and I like to bring it full circle to like what we were discussing earlier. I think the power though in like what I'm getting from you, like the power in your evolution and your ability to problem solve, though, also comes from having such a strong base. You have such a strong base with your setups that then evolving them actually becomes. I don't want to say easy because it's clearly hard work, but I think like we compare that to what a lot of people do is almost they go from like they might be fishing 1 minute and then next they were fishing with a rod. Then all of a sudden they'll go, I'm going to get a spear out and I'm going to try
Mhm,
spear fishing
mhm,
just to continue with tonight's analogies.
mhm,
And I think like from what I'm getting from you is you can still fish with a rod, but you might have to try a slightly different technique or
mhm,
whatever it is.
mhm.
And I think that's just a point that's I just really wanted to make. And we're next going to ask you some routines for staying sharp. But I think you've just covered all that. Like staying sharp sounds like dedicating time every single day
Mhm.
and continue to explore.
Yeah, and in terms of routines, the importance of like in a developing new setup idea and studying deep diving and all is very important from my perspective. So when I have created my daily schedule, the first thing which I do in the morning is to look at stocks which are up 20% plus in 5 days and stocks up 50%, because it's the same thing about fitness, right? And if you don't schedule your fitness and if you keep it as the last thing, it never happens,
Yeah.
right? So I have created my schedule to give the importance which it deserves. Then obviously if I find something in the morning, it strikes me, then I will spend time in the evening working more detail on it. But if I don't do it in the morning, it never happens.
And then pretty, we've asked you a lot of questions and we've talked about a lot of great topics. What is something that we should be asking you? What is a piece of advice or what is something that, you've been seeing out there that you'd like to talk about or a topic that comes to mind?
I think most of the thing which I see is like basically lack of creativity and innovation amongst traders, right? And basically, uh, if you are beginner and if you're struggling, right, you need to be more creative and you need to be more innovative. You need to try a lot of ideas or try variation of these entry tactics, try variation of sizing, try selling at different levels and all. I see like people getting paralyzed and not doing the innovative thing at all. They're just like waiting for somebody to give the solution, right? I tried so many things, uh, and I try today also. I try so many things because unless you try, you don't really find a solution, right? And basically, so I would say that look at how innovative, creative, and how many ideas you're looking at is very important if you want to be really successful in this business.
Awesome.
Absolutely. And then, one other thing, whenever you come to mind for me, sometimes it's just the very simple advice too of like someone, like you said, they can feel paralyzed or really stuck on a problem. And you will give like the most simple solution that like it almost seems kind of funny. And an
Mhm,
example at Traders for a Cause that you used, you said that there was, a trader who lost, I think, $1.2 million. And he was saying, how can I get this back? And you said you make 1,200 trades and make $1,000 on each
mhm,
trade, and it's kind of like funny to
mhm,
think about it that way. But I feel like for someone who's in a paralyzed state,
mhm,
they just don't know what to do. Like having something even as simple as that can kind of like snap them out of it.
mhm. I think, and also like if you look at it, it's not their fault also because human nature is like that. When you see like sometimes when the earthquake happens or some big tragedy happens, and you see the footage of that, people are just like completely paralyzed. Somebody loses 1.2 million or 5 million or something. They are like they stop thinking. They're like they don't know what has hit them, right? So they are not even they have to snap out of it and then come out of it and then say, okay, this has happened, now I need to do something about this kind of a thing. And which happens to a lot of traders when they go through a drawdown and they dig deeper and deeper, rather than like just completely thinking outside the box basically.
Yeah, and then that's kind of I think one of the last topics that we'll kind of bring up, but I think that a topic that is very underrated and is not talked about frequently is really the advantage that trading from a position of strength gives you. And so, like you said, when people go into a drawdown, when things are falling apart, kind of everything falls apart. It's
Mhm,
their
mhm,
psychology is different. They're hesitating. They're doing all these things. So just staying in a positive mindset. Avoiding large drawdowns and everything. Is that something that you take into account? Trying to keep the account near all time highs, trying to stay in a
mhm,
positive
mhm,
and
mhm.
mindset versus letting it get to the point where someone has to dig out of this giant hole.
Yeah, but I learned through my initial years of like digging out of drawdowns. It's the worst feeling in life. It's terrible. You feel like such a defeated. You like and feel like not really motivated, right? And also, I've spoken to so many people, helped so many people come out of drawdowns, and like I have a very good understanding of what, as you said, like it affects them. Like I see physically, I get into a Zoom meeting with somebody who's got a 5 million. You can see in his voice, you can see his hair are not combed. His like a whole life has fallen apart, right? So it's much better to be like in a trade with, and this is why I have so much importance to situational awareness and every day asking that question, because how do I get not get into trouble is by proactively asking the question. If breakouts are not going to work, I don't even try breakouts, right? uh, it's very expensive lesson to learn from the market. You try and then it doesn't work, right? And rather than that, you just ask, you look at, are they working, not working? If they're not working, I'm very happy sitting out, like, because I know where. I just need a couple of good months in a year for them to work to make good money, right? And so that, but that level of understanding about your confidence about your setup and your this thing takes certain time. And drawdowns can be a good teacher if you are willing to learn from it, right? And if they happen early in your career.
Absolutely. And I think, yeah, the power of asking yourself a simple question. And I think as well, I love what you just said about being creative and innovative as well. I think that is stifled in a lot of traders actually. And now I come to think about it, that's something I think that moving forward from this conversation, that's something I think I can definitely adopt, is to be more creative, be more innovative, and actually start exploring some of those. I suppose start evolving before I need to. I think that's definitely
Mhm.
something I can do. And I think on that note, I think Chris, I think that pretty much wraps up what we had intended to chat about. I mean, I've been blown away. I've absolutely thoroughly enjoyed it. I'm
I
glad
also enjoyed it.
I've loved it. I actually I rewatched the previous Trading Takes
Mhm.
episode. Well, you guys did this morning. I watched it before, watched it again. Anyone
Mhm.
getting to the end of this, and if you do want more Pradeep, I strongly recommend going back probably 6 months and watching that. Anything to add, Chris, before we wrap it up?
No, I mean, this conversation has been so great, and all the conversations that I've had with Pradeep have been the same way. And we appreciate you sharing your time, your
Mhm.
talents with other
Mhm.
people. And I think it will help a lot of people to hear this conversation. So thank you so much for how kind you've been to Investors Underground. We really enjoy speaking with you, and we'll talk again soon, my friend.
Sure. Looking
Thank you,
forward to it.
Pradeep.
Thank
Thank
you.
you, Chris.
Thank you.
Thank you,
Thanks.
guys.
Okay, thank you everyone for
Thank you.
watching. See you all
Mhm.
soon.
So, bye.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of our others with some great traders. Thank you for watching.